By far the best investment you can make is in yourself.
Hello, investors. It is Ben here with Market Evolution. The past week, there has been a total of 5 banks go under, and the markets rally from both stocks to a huge lift in crypto markets. I will cover everything you need to know about this recent update and why this is potentially another bear market trap. Until the end to get my take on when the next bull run will begin. Yes, a total of 5 banks went under, including Silvergate, SVB, Signature Bank of New York, First Republic Bank, and Credit Suisse. Many people speculate as to why they failed, whether that be poor management, undiversified assets, or lack of regulation. Whatever the case may be, the Fed has already printed $300 billion and plans to print close to $2 trillion in order to bail out depositors and cover losses the banks may have. This is very beneficial, but horrible news for the markets. Some people may have you believe that putting more money into the economy will be good news for the markets, and it will be short term, but the long-term consequences are detrimental. See, the Fed's main goal is to bring inflation down to 2% range by raising interest rates to the point where the economy will suffer due to lack of money in the consumer's pocket. This will cause businesses to lower their prices. If we rewind 3 years ago to 2020 COVID, when the Fed printed nearly $2 trillion, that caused inflation to peak at 9.1%. That led to higher gas and consumable products to be too expensive. Assume your average wage growth per year, whether you live in Canada or America, is 3.4%. The everyday product will be too much to buy. Let's imagine everyone has $1 and an apple is worth $1. Then the government gives everyone another dollar, which makes everyone have $2. The producer of the apple will start to realize that people now have more money to spend on apples and will raise the price slightly due to the abundance of money in the consumer's pocket. This continues until the price gets too high where the consumer can't afford it anymore. So of course the price of stocks will increase when there is more money being put into the market. Now, what are the real consequences? With higher inflation due to more money, the Fed will have to make the tough decision to raise interest rates by more or hold its interest rates at a certain peak for longer than the markets projected. Doing this will eventually take the excess money out of the markets. This will cause major turbulence in the markets for the reason that investors will not be knowing what's happening next. The government is essentially doing the opposite of their goals, which could make the upcoming recession even longer or deeper. Over the next few months, you will start to see more institutions close down or lay off employees due to high debts or lack of capitalization. This could only cause the economies to have a downtrend. As far as crypto is concerned, Bitcoin increased by nearly 30% this past week due to Binance tweeting that they just converted $1 billion of their native token into Bitcoin, Ethereum, and BNB as a part of a recovery plan made by Binance following the FTX exchange collapse. The perfect storm of bank bailouts and the $1 billion being pumped into the markets is why you are seeing everyone assume that the next bull run has already started. I can assure you that this is nothing more than just a certain bear trap. The economy still has more suffering to do before inflation gets down to that 2% range, and will now be even harder to achieve that due to more money circulating. I believe the crash will come in third quarter of 2023, and we'll start to see the next bull run in the second quarter of 2024. My advice is don't fall into the state of euphoria yet, and stay updated on all market related news and advice by hitting that like and subscribe button, and I will see you in the next video.